Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the action-packed day in the markets on January 26, 2026. We've got a lot to cover, from index moves to standout performers, upcoming earnings, and some big-picture trends that every long-term investor should keep on their radar. So, grab a coffee and let's dive right in. First up, let's talk about how the major indexes performed today. It was a mostly positive day across the board. The S&P 500 notched a solid gain, climbing about 0.5%, showing resilience despite some mixed signals in the broader economy. The Nasdaq also pushed higher, up a bit over 0.4%, fueled by strength in tech, though momentum seems to be cooling off slightly. Meanwhile, the Dow Jones led the pack with a nice 0.6% jump, reflecting confidence in some of the blue-chip names. However, the Russell 2000, representing small caps, slipped a tad, down about 0.3%, hinting at some caution among investors in riskier assets. For us long-term folks, this mixed picture suggests sticking to quality names while keeping an eye on smaller players for potential value plays. Now let's spotlight some of the big winners among large-cap stocks today. Tech continues to show strength, with names like Apple and Cisco Systems leading the charge, both up around 3% or more. Arista Networks was a standout, surging over 5%, likely riding the wave of ongoing demand for networking solutions in the AI and cloud space. Also, Mercado Libre caught attention with a solid gain of about 3.5%, reflecting optimism in emerging market e-commerce. For long-term investors, these moves highlight the staying power of tech and growth sectors, though it's wise to watch for overvaluation risks in the short term. On the flip side, not everyone had a great day. Among the large-cap losers, Tesla took a hit, dropping over 3% as concerns linger around delivery numbers and competitive pressures. Intel also stumbled hard, down nearly 6%, with post-earnings sentiment turning sour amid warnings of a bumpy road ahead. Advanced Micro Devices wasn't spared either, shedding over 3%, possibly due to profit-taking after a strong run. For us focused on the long game, these dips could be opportunities to scoop up quality names at a discount, but timing and fundamentals are key. Don't rush in without a plan. Looking at the market movers, Nvidia remains a name to watch, though it edged down slightly today by less than 1%. Still, its massive market cap and role in AI keep it at the forefront of investor attention. Apple, on the other hand, powered ahead with a nearly 3% gain, showing its enduring appeal. Tesla, despite the drop, continues to be a high-volume stock, reflecting polarized views on its future. These heavyweights often set the tone for the market, and as long-term investors, tracking their trends can offer clues about broader sector health. Speaking of volume, let's check out the most active stocks today. Nvidia again tops the list, with massive trading activity underscoring its dominance in the AI narrative. Intel also saw heavy action, likely due to the sharp sell-off and bargain hunters stepping in. Ford Motor and Plug Power were also buzzing, though with mixed results, reflecting ongoing interest in legacy automakers and alternative energy plays. High volume often signals short-term volatility, but for us, it's a reminder to focus on the underlying business strength rather than daily noise. Turning to some of the broader economic news shaping the market, there's a lot of buzz around global turmoil, pushing assets like gold and oil back into focus. Gold, in fact, shattered the $5,000 per ounce mark, a historic high, as investors flock to safe havens amid geopolitical tensions and U.S. policy uncertainties. Meanwhile, the Federal Reserve is expected to pause its rate-cutting cycle this week, which could keep markets on edge as we await clarity from Chair Jerome Powell. For long-term investors, this reinforces the importance of diversification. Having some exposure to commodities like gold can hedge against uncertainty, while staying patient through Fed-driven volatility is key. Now let's pivot to what's coming up with earnings season in full swing. This week is packed with heavy hitters, especially from the tech space. We've got Apple, Meta Platforms, and Microsoft reporting, and the market will be laser-focused on their commentary around AI spending and consumer demand. Tesla is also on deck, with investors eager for updates on production and any surprises from Elon Musk. Beyond tech, companies like Johnson & Johnson and Procter & Gamble will give us a read on consumer staples. While short-term price swings are inevitable post-earnings, for us long-term players, these reports are gold mines for insights into business health and future growth drivers.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Zooming out to a one-week view, some large-cap stocks have posted impressive gains. Micron Technology jumped over 13%, fueled by strong demand for memory solutions in AI applications. Petrobras also saw a double-digit rise, benefiting from energy sector tailwinds. These short-term surges are exciting, but as long-term investors, we need to assess if these gains are backed by sustainable fundamentals or just market hype. On the other end, we've got some notable weekly losers. AppLovin and Shopify both dropped around 14% over the past week, possibly due to profit-taking in high-growth tech names. Abbott Laboratories also slid nearly 13%, reflecting broader healthcare sector pressures. While these declines sting in the short term, they might open up buying opportunities for us if the core business story remains intact. Let's touch on sector performance over the past week. Energy led the charge with a robust 5% gain, likely tied to geopolitical risks boosting oil prices. Basic materials also shone, up over 8%, as commodity strength continues. These moves suggest near-term momentum in cyclical sectors, but for long-term portfolios, balancing exposure to these with more defensive plays can help weather potential downturns. Conversely, healthcare and technology lagged behind, down about 1.5% and 1.2% respectively over the week. Profit-taking in tech after a strong run and specific company disappointments in healthcare seem to be the culprits. For us, this is a reminder that even strong sectors can face temporary headwinds. Patience and a diversified approach are our best friends here. Wrapping up with a broader perspective, the S&P 500 remains in bull market territory, though some analysts note that momentum is waning with narrower breadth at each new high. This could signal a consolidation phase in the near term, but for long-term investors, it's not a red flag yet. Historically, pullbacks or flat periods like this often set the stage for the next leg up, especially if economic data stays supportive. Keep your focus on quality and don't get swayed by short-term noise. Similarly, the Nasdaq is eyeing all-time highs, driven by tech, but it's worth noting that investor flows are starting to favor foreign equities and commodities over U.S. large caps. This rotation could create opportunities in undervalued areas for us long-term thinkers, so stay alert to global trends.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.